Good morning, Southwest Florida, and welcome to Saving the Investor. I'm Alfie Townsend, and if you're one of the millions that are concerned about higher taxes, inflation, and the national debt, you're in the right place.
Coming up on today's show, income strategies for retirement. What keeps you up at night? Benefits of a fiercely independent advisor, and much more.
Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group. Alfie is a published author, radio show host, speaker, and industry leader.
Why do you use an annuity? A lot of people use it for the wrong thing.
He works with retirees and pre-retirees to build and protect their nest egg and offers his experience to help those concerned about financial independence in retirement. If you've got questions about retirement, Saving the Investor starts now.
Well, good morning and welcome to Saving the Investor. Glad you're with us this morning. I am Craig Wolf alongside certified financial planner professional Alfie Townsend here at the Advantage Retirement Group. Alfie, good morning.
Good morning.
All right, in a volatile market and a low interest rate environment, an income strategy for retirement is challenging.
It is.
And it's key. There's three that I would like to talk about this morning as we kick off the show. Let's talk, number one, about dividend paying stocks.
So there's different ways to create your income. Okay, so we'll talk about the three. So the dividend paying stocks are going to be companies. These are going to be your older companies, your value companies. A lot of them are going to be your energy, companies that you're very well.
A lot of them are Dow 30 stocks.
Yep, and they're the ones that typically kick off that dividend. So some people can just live off the dividend, but sometimes it's a 3%, 4%, 5% dividend. So that could be an option for some people for part of your money. So everything we're going to talk here would be for part of your portfolio. You don't want to put everything in a dividend paying stock or these other items we're going to talk about.
Yeah, one of them, and I hear you talk about these a lot, is an annuity. Let's talk about a fixed annuity as a strategy.
Yeah, so annuities could be, you could have, there's different types of annuities. There's some that you want nothing to do with, like the variable annuity, but there's some that will kick off a pretty darn good income. So really annuity would be used for cash flow if you want that 5 or 6% that comes in each and every year. And you want to say, I want it lifetime, regardless of what happens. I never want to worry about my income coming in. So you have to really create your own pension. So we can do that with a fixed annuity. There's different types out there, so we can make sure you get the right one on that.
So you're talking positively about the fixed annuity as opposed to the variable annuity.
Exactly, good point, yes.
Right. And lastly, structured notes. Let's talk about them.
So what a structured note is, these are pretty interesting because this is where you're saying, hey, I'm willing to take a little bit of risk. I'll take some risks to get some returns. So we can customize this any way that there's a lot of, the more bells and whistles we add on, the less interest that you're going to make. But let's say right now the interest we can generate 7-8%, and it's different every day. But once you get it, then you're locked in for. We usually like to lock it in for 1 year. These notes might be a 15-month note, a 21-month note, and they can be called. But we make it where they can't call them for 1 year. So that brings down the interest rate a little bit. And we make it where it's tied to, let's say, the S&P 500 or we can say the NASDAQ also. So let's say we have it based on that. The key is this, and we'll go through all this. This is just something that I'll explain briefly on TV. But if the S&P or NASDAQ does not go below 30% from when you get in to when that note's due, 21 months or 15. So for it to go down 30% in a down market already I think it's a pretty good bet that you're in pretty good shape. So as long as it doesn't go down 30%, you're going to get your 7-8% interest, whatever that note is at for that time period. Now, what happens when the note's done? When it's due in 15 months or 21 months, as long as the S&P or NASDAQ is not below 30%. So let's say, for argument's sake, it's down 25%. So you got your last interest payment, and then you get your full principal back, even though it was down 25%. The problem is if it's more than 30, if it's 31%, then you would get 69% of your money back. So that's a risk that you take, but it's a pretty good risk for a lot of people because they say, you know what, I don't think the market's going to go down 30, and we can make it where it can't go down 40. We can add whatever we want on there. It does adjust the interest. But if you're willing to take a little bit of risk, you can get some pretty good income from that type of investment.
So to sum it up, in these volatile and low interest rate environments, good components would be dividend-paying stocks, fixed annuities, and structured notes.
Yeah.
All right, we are just getting started this morning on Saving the Investor. Stick around.
You are watching Saving the Investor, where your money matters.
If you're ready to create your dream retirement, I have just the book for you. Unlike most books on investing, it doesn't require a large investment of your time. It's not filled with financial jargon and difficult to understand explanations. It's an easy read filled with valuable insights. So valuable, in fact, that anyone who's soon to be or already is retired should have a copy on their shelves. And today, it can be yours at absolutely no cost. It's called Making Waves in Retirement, written by Alfie Townsend, Southwest Florida's certified financial planner professional, radio show host, and TV personality. Making Waves in Retirement breaks down the insights that Alfie's gained over his 4 decades of helping people just like you plan for retirement. Real stories about real people illustrating what they've done wrong and what they've done right. Strategies to help retirees and those soon to retire make the right decisions and avoid costly mistakes. And if you save for retirement, this is the book for you. Get your complimentary copy today simply by being one of the first 5 callers. The number to dial is 239-747-1080. That's 239-747-1080. There are no strings attached, so if you're interested in living your dream retirement, you have nothing to lose and quite possibly much to gain.
Ready to live your retirement dreams? Then it's time to meet Alfie, Southwest Florida's certified financial planner. Schedule your complimentary retirement income plan review now. Give Alfie a call, 239-747-1080.
What is keeping you up at night? You know, I asked that question many years ago to our clients. We were doing a coaching class for our clients at our office, and I said, what's keeping you up at night? And I'll never forget that. And these are our clients that are, I'm telling you, we have coaching classes, we keep them updated, and there was a lot of things I was very surprised at some of the things that they were saying. And so I asked you, what is keeping you up at night? And I asked my people that just come in for the first time, and you know what they say is typically, I don't like the direction of our country, where it's going. They might say stuff about the debt that we have, the deficit that we have, taxes, and all. You know, there's so many things that's keeping you up. But then what I say is this: I say, you know, you can only do what you can do that you can change, and there's some things you can't change. So the things that are really keeping us up at night are things that you cannot change. Okay, we hope change will happen. We have elections that will make things happen, but some things you cannot change. But the things that you can change might be just what's really keeping you up at night, is that you don't have a comprehensive retirement plan that is taking care of inflation, taking care of your taxes, taking care of your legacy, taking care of the things that you want to get you to and through retirement, and then also to go to your children. If you have children, your legacy, you know, where you want this money to go. So that might be what's keeping you up at night. You know, the market can keep you up also. Yeah, the market's very volatile, and when the market really starts to go like it did earlier this year, and it will drive you crazy. But the thing about it is, that's something you can do something about. Definitely, that's something that you can say. You can come in, and it's called the retirement simulator, and we can find out, why is your portfolio going down more than the market? There's things you can do to safeguard some of that money, some of that income, and have growth to fight inflation. So maybe, not everybody can really build a comprehensive portfolio that really looks at everything, that looks at taxes, that looks at some principal guarantee, that looks at your overall picture opposed to just bits and pieces. That's what we call like putting a puzzle together and you're missing some pieces. So maybe the missing piece in your puzzle is just really getting a second set of eyes to look at what you have and seeing if we can put you in a better position so you can maybe sleep better at night. Give us a call.
You are watching Saving the Investor, where your money matters. Ready to live your retirement dreams? Then it's time to meet Alfie, Southwest Florida's certified financial planner. Schedule your complimentary retirement income plan review now. Give Alfie a call, 239-747-1080.
You have a club for every scenario, a driver for the long holes, wedges to get you over the hazards, and a putter when you need a touch of finesse. And you need plenty of these too. What about your retirement? Will you have enough to play the back nine? Find out today. Schedule your complimentary retirement income plan review with Alfie Townsend, Southwest Florida's certified financial planner. Call 239-747-1080.
You've got questions, and Alfie has the answers that will keep you on the retirement fairway.
I'm not quite ready to retire, but it's getting closer. Should I be considering rearranging my investments and assets?
That's a great question, because the closer you get to retirement, right now you're in what we call the accumulation phase. You are paying into your retirement plan weekly or bi-weekly, and it really doesn't matter with the market going up and down. Of course, we want it to always go up, but it goes up and down, but your dollar cost averaging it in there. But once you retire, now you got to take that money that you accumulated and now all of a sudden create an income from it. So that's called really the harvesting phase. Take the money that you accumulated and start taking money out of it. The best thing to do if you're about to retire, soon to be retired, come in and let us do an income plan and analysis of what you have to see if it's even feasible to retire. And if it's feasible, you're going to say, you know what? Hey, I can retire. And you want to retire with confidence, and you want to be aware if you can or can't. So make sure you get that plan before you make that final choice.
My company offers target date mutual funds. Can you explain what these are? And are they something I should consider?
So as a 401k, if you have a target date mutual fund, what that typically means is the later the date, the more aggressive it's going to be. The closer you get to retirement, the more really conservative it's going to be. The best thing to do if you're over age 59 and a half, if you can do what you call in-service withdrawals, you can control that money, you can roll it into your own IRA and have many, many more options than a target fund. I'm not a big fan of target funds because they're ETFs, they're not really managed. I think at this stage, if you're about to retire or soon to be retired, it's much better you control it and you have more options than to do a target fund.
What can I do to protect the assets I'm going to pass along to my loved ones when I'm gone and make it an easier process for them in general?
So legacy planning is so important for some people, and some people it's not important for. It sounds like it is an importance to you. So one of the main things you want to do is you're going to pass money on. You want to make sure they're named as your beneficiary. You might need a trust. A trust will bypass probate. It depends on their ages. It depends on if you want them to get it in a lump sum. What I always say about a trust when you're passing monies on is that you control that money even though you're no longer here. It's still in control, and that's what a lot of people need, because kids right now, if they get it too young, they're going to go through it. A lot of times they're going to go through it, and then all this money you work for and you wanted them to have for their retirement down the road, it's gone. So there's some planning that can be done, but a trust would be a good thing. We have IRAs would be, it's not the best thing to pass on, because they have to take that money out by 5 years. But there are different plans that we can put together to give them that legacy that you're looking for them to have.
Are all financial planners and investors fiduciaries?
A fiduciary is going to be someone that looks out for your best interests. As a certified financial planner professional, I'm a fiduciary. As a registered investment advisor, I'm a fiduciary. That means we have to put your interests first. Not all financial planners, or I should say advisors, are fiduciaries. Some of them are just do insurance products. So if they're just insurance licensed, they're not going to be a fiduciary. If they're a broker, some of them are fiduciaries, some of them are not. So you have to make sure that they are fiduciaries, and you ask them that question: are you a fiduciary? And let them explain what a fiduciary is. And really what it is we have to look out for your best interest first, which I think that's basic when it comes to financial planning.
Ready to live your retirement dreams? Then it's time to meet Alfie, Southwest Florida's certified financial planner. Schedule your complimentary retirement income plan review now. You are watching Saving the Investor, where your money matters.
When you're nearing your retirement, it's important that your plan include the proper steps to make an efficient and effective transition. There's a lot to consider. Will your income plan meet your lifestyle? How should you reallocate your assets? Is your withdrawal plan tax efficient? Well, practice makes perfect, but you only retire once. So how do you know you're making the right decisions and avoiding costly mistakes? Well, that's simple. Call Alfie Townsend, Southwest Florida's certified financial planner professional. Alfie has over 30 years of experience helping people just like you transition into retirement. So be one of the first 5 callers and receive your complimentary retirement transition review. Call 239-747-1080. There's no cost and no strings attached. Your retirement transition review includes key deadline schedules, asset reallocation guides, income plan analysis, and tax-efficient withdrawal strategies. Be one of the first 5 callers now, and this review is yours at no cost. Call 239-747-1080. You only retire once, so let's get this right. Call Alfie now. Welcome to another segment of Team Talk. I'm Mary Thompson in studio with Alfie Townsend, founder and president of Advantage Retirement Group and certified financial planner professional. And Alfie, as a certified financial planner professional, I think it's really key for our audience to understand that you're fiercely independent. You are an independent firm, but you have some of the best partnerships that you can find.
You're right. What's nice about independent is that we're not tied to any one company, anyone telling us what we have to do, what we have to offer, what we have to sell. And a lot of those companies that are out there, a lot of these big firms that are out there, it's called revenue sharing. And this is, I think, is a disservice to anybody that's doing business with them, because what that means is that if they give you a mutual fund, they're getting extra money, extra kickback. It's called revenue sharing. Mm-hmm. So you're starting to ask yourself, is that really for my benefit, because I'm not getting anything out of it, or is it for the firm's benefit? So that's what I like about being independent. Anybody that we deal with is who we wanted after we vetted them. Right. We wanted to deal with them. And that's what's nice. And they don't tell us what we have to offer or anything. We just look at what they have and say, you know what, that would be great for our clients. Mm-hmm. That would, and that's what's nice about being independent. And that's what's nice. We don't do revenue sharing. We don't do any of that. And so when we're putting plans together, we partner with, we have a team of, a CPA. If we deal with CPAs, we deal with the lawyers, and they don't work for us, but we vetted them and we want to partner with them for our clients. Mm-hmm. Now they give our clients better deals because of us, but that helps us with our clients. So Independent is I feel one of the most important part when you're putting a plan together. We can use money managers, the buying power that we have because of the partnerships that we have, as if we were a big institution, because we're getting buying power in the billions and billions of dollars. So when we're building portfolios, some of these managers that we have, it would take millions and millions of dollars just to open up an account there.
Right.
And we could put a few $100,000 there if we're building a portfolio, and we would get a better price than someone putting in millions of dollars in there. So that's what I'm talking about, is really utilizing our tools and utilizing our power with our partners.
Absolutely.
Yeah.
And to even do a deeper dive, there's a difference between retail investing and institutional investing,
right.
and that's really what you're talking about. Because of that relationship you have with these portfolio managers, you do get the buying power that you're talking about.
Institutional is what you want, because when we make changes, there's no fee on making a change. There's no, when they're rebalancing, if they're changing the portfolio because it's very volatile at the time, they're going more into bonds or cash, whatever it might be, you're not being charged for that. So this is, it's very important. If we call you and say, listen, we have a new manager that we're going to start utilizing some of your accounts with, they know that we're not getting paid extra doing that. It's for their benefit, not our benefit. So it's important to have independence.
Yeah, absolutely. And as a certified financial planner, that's what they hire you for.
Yeah, that's true. Put that plan together and monitor it and make changes when necessary.
Absolutely. Well, if you'd like to work with a certified financial planner professional to see what we can do for you, give us a call.
You are watching Saving the Investor, where your money matters. We all have a picture of our perfect retirement, but how do we get there? At Advantage Retirement Group, helping you get there is our business. We're passionate about getting to know you, learning your hopes and dreams. Why? So we can work with you to achieve them. How? By maximizing the money you've saved, minimizing the dollars you pay in taxes and the risk you are exposed to, and creating a retirement income plan that ensures your savings lasts a lifetime. We're thankful to work with so many wonderful people, and we'd love to work with you too. Call Advantage Retirement Group today for your no-cost, no-obligation evaluation, 239-747-1080. Your retirement is too important to put off. Call now, 239-747-1080.
Everyone knows about required minimum distribution. Now it's at 72. Now, what should you be doing if you're not 72? If you're, let's say, in your 60s, that means at 72 you have to start taking out required minimum distributions. The good thing is you can start taking it out at age 59 and a half without that 10% penalty. So what we'll do would, do some tax strategy with our clients, maybe some Roth conversion. Or if you need money, a lot of times people that come to us were investing their money and they need income. So sometimes if they're in a low tax bracket, I'd rather give their income from the IRA and leave their tax deferred money alone, or they're better, obviously if you're in the stock market, that's called long-term capital gains, where the IRAs are ordinary income. So if we can take out some of this ordinary income before you're 72, that means at age 72, you don't have to take out as much, and that's going to save you a lot of money. So there's some things that we do here at the Advantage Retirement Group that we want to look at. Roth conversions, we want to look at trying to take some money out of your IRAs before you're 72. So when you are 72, you don't have to take out as much. And when that time comes, you have some tax-free money. Let's think about it, we know we have a high debt here. We have high debt in the United States. That means that taxes are most likely going to go up opposed to down. So if we know it's going to go up, what do we want to do? We want to start getting some money in tax-free. Tax-free will be huge at that time. If you need $50,000 and you take out $50,000 from something that you don't have to pay any income tax on, that's like taking out $75,000. So let's look at your required minimum distribution. Let's look at if we should start taking money from IRA versus your savings. Okay, this is something we want to look at. And so required minimum distributions you have to do at age 72, but we can do it before 72 to put you in a better position at 72.
You are watching Saving the Investor, where your money matters.
Retirement gives you long-awaited opportunities. You finally gain control over how you spend your time. But you also need control of your investments, of your hard-earned money. There are a lot of moving parts, and just saving over the years is the first part. What about generating income, your Social Security, minimizing taxes, or managing risk? If you save for retirement, call us at 239-747-1080. Retirement can last more than 20 years, yet many people don't have enough money saved to get through 1 decade, let alone 2. Call us at 239-747-1080. Let us show you how to make your nest egg go the distance. That's 239-747-1080.
At Mark Lauren Designs, we love what we do. We have a passion for the handcrafted nature of our industry. Many jewelry stores, they don't make jewelry anymore. What they do is they order it out of a catalog and they sell it as custom, whereas we actually start from scratch. The pieces that we design for our customers, each is unique. Each says, I love you in a different, unique way. They're just individual, one-of-a-kind works of art. And that's one of the things that makes it exciting and fun for us.
Remember the Wall Street bailouts? Those same big banks and financial firms have been fined billions for misleading customers. And now they want to manage your retirement savings. Why would you trust them? I'm Alfie Townsend, Southwest Florida's certified financial planner professional. My values are Main Street, not Wall Street. As an independent advisor, I don't work for shareholders, I work for you. If you want a fresh start with a local advisor, give me a call today.
Mondo Uomo offers a remarkable selection of the latest styles in menswear. Visit Mondo Uomo at the Village on Venetian Bay in Naples, Alberto, Bugacci, St. Croix, Zanella. Come see what remarkable shopping is all about.
You have a club for every scenario. A driver for the long holes, wedges to get over the hazards, and a putter when you need a touch of finesse. And you'll need plenty of these too. What about your retirement? Will you have enough to play the back nine? Find out today. Schedule your complimentary retirement income plan review with Alfie Townsend, Southwest Florida's certified financial planner. Call 239-747-1080.